Hey everyone, welcome back to Corporate Decoder, the place where we dig through the fine print so you don't have to. Today we're cracking open a fresh 10Q filing, and let me tell you, this one's got some interesting moves, almost like this company is trying to impress someone. But are they really as good as they seem? Let's find out. Code, if you appreciate getting straight insights from corporate documents, make sure you're subscribed and join our Discord community, linked in the description below for more discussions. We are diving into ServisFirst Bankshares Inc. SASH report for the first 3 months of 2025. Right off the bat, earnings per share jumped and deposits grew significantly. Is this a sign of a booming bank or just clever accounting? That's what we are here to decode. As of late April 2025, ServisFirst had about 54.6 million shares of common stock outstanding. Keep that number in mind as we look at per share metrics. It gives us a sense of how widely the profits are being distributed. Let's jump into the consolidated balance sheets, the snapshot of what the company owns and owes. As of March 31, 2025, total assets were roughly $18.6 billion, up from $17.4. This is a sizable jump, showing the company is expanding. Looking at where those assets are, interest-bearing balances with other banks soared from $213. This suggests the bank might be parking more cash in secure liquid accounts. This can be a defensive move, signaling caution about where to invest right now. Loans, the core business of a bank, also increased but modestly. Net loans hit $12.7 billion, up from $12.4 billion at the end of last year. This indicates steady but not explosive growth in lending. Now, let's look at the other side of the balance sheet, the stockholders' equity. We see an accumulated other comprehensive loss of negative $25.1 million. While not a huge amount, it means the bank experienced losses, mostly from their investment portfolio. Moving on to the income statement, which shows the company's profitability. Net income available to common stockholders was $63.2 million for the quarter, significantly up from $50 million in the same period last year. That's a 26% jump in profits, so it looks like the company made a good bit of money. Basic and diluted earnings per share also rose to 1.16, up from $0.92, up from $0.92, up from $0.92. Interest income jumped to $21 million from $226.7 million. This jump in interest income is the core of the story. What's really interesting is that interest expense on deposits decreased to $94.7 million from $104.1 million. It means the bank is paying less for the money it borrows deposits, while earning more from its loans. Non-interest income is more of a mixed bag. Service charges increased, but bank-owned life insurance income decreased. On the expense side, non-interest expenses were well managed. It shows some good cost control by management. Let's take a quick peek at comprehensive income, which includes some items that bypass the income statement. We see other comprehensive income at $7.1 million, largely from unrealized gains on available for sale securities. It means the investment portfolio is doing better this year. Now for the statement of cash flows, this report tells us how the company is actually moving cash in and out. Cash and cash equivalents increased by over $973 million. The net increase in federal funds purchased, which is money borrowed from other banks, increased by $34 million. The bank is borrowing a lot more and using that money to increase their cash position. Digging deeper into investing activities, they bought almost $115 million in debt securities, but also had securities mature and called for over $82 million. For financing activities, we see that a bunch of common stock was issued through stock options and stock plans. A note of caution here, 3276 shares of common stock was withheld to pay for taxes. Now we're scrolling down to the notes where more details are shown about the financials. There's an adoption of a new accounting standard related to tax credit structures. This is important as any changes to such accounting might impact their financial picture significantly. A note on earnings per share shows a clear calculation of basic versus diluted earnings per share. The weighted average common shares increased and net income also increased by a similar ratio, leading to consistent growth on a per share basis. Here in note 4 on securities, we see a breakdown of the investment portfolio. There are unrealized losses of $38.7 million in available for sale debt securities, but they are choosing to hold on for now. Accrued interest and dividends receivable are at $70 for $5 million, up from $62 at ETJL, increasing revenue from investments and loans. In the notes on loans, it details that the loans net increased by about $230 year over year. and that the loans are made up of mostly the same type of lending as last year, commercial real estate. Diving into equity, there's a stock-based compensation expense of $864,000. It basically means the company is issuing shares as a benefit to employees. We see an increase in other comprehensive income net of tax by $7 million. This shows positive changes to values on held to maturity and available for sale securities. ServisFirst has ENCT notes to consolidated financial statements scroll. They made revisions to the consolidated statement of stockholders' equity for a prior period to account for a retained earnings adjustment. It means they changed something in the past. Scroll operating activities to net income scroll. For statement of cash flows, there is a section for operating activities, investing activities, and financing activities. Diving into the company's investment activities, the payments to acquire available for sale securities decreased, while the amount in proceeds from those assets also decreased. However, there was still a net amount of funds used during the period. On their financing activities, net increase in federal funds purchased was substantial, while taxes related to stock options decreased. They're using 1.58B of debt securities as collateral. It's crucial to monitor those assets to see if they are going down in value. Now let's put everything together. ServisFirst is showing strong earnings and deposit growth, but there are some subtle shifts happening. Their reliance on borrowings has increased, and they are holding on to securities with unrealized losses, hoping for them to come back. From an economic point of view, ServisFirst is handling the current economic climate in a fairly reasonable way. The company is taking a bit more risk, hoping the Fed funds rate decreases in the future. The core fundamentals are very stable, but if the stock market doesn't recover soon, there is a possibility of issues in their earnings. They also don't have a lot of wriggle room due to this. Alright, that's our breakdown of ServisFirst Bank shares' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.